Please read this disclaimer carefully before proceeding further. All right, traders, let's look at the markets. Thanks for joining me in this analysis. My name is Vic. We are always going to look at DXY, and the reason behind that is because everything that we have in the market is directly or indirectly dependent on DXY, the strength of the dollar. Now, I've been iterating it for quite a while that on dollar, we have this kind of structure, and the market came to this level and then started to fall down. And look at what we have been looking at. If I show you the previous structure, you see the market created this previous impulse leg and then started to move higher, and then it fell down once again, and then it started to move higher, and it came right into 61.8 Fibonacci level, and in the process it also created this W pattern. Now because it came to 61.8, it started to go down and then started to move back up to create a double top around 61.8. So what we were looking for is looking for short positions around this area, but ultimately it went down to a particular level, a zone that we have been watching for a few weeks now, and this level is basically the level which is very important. I mentioned this in my previous analysis and in my other post as well, that a market could actually come down to all the way to 91.85, and it came right into that level, and we had confluence of this monthly trend line as well around that area of 91.85. So when we have something like this, when we have like powerful confluences, then we can see the market is expected to react. And if I go down deeper into that particular area, we can also see that we had a moving average there, and that also supported the price. In my previous week's analysis, I mentioned that this candle was supposed to close below the low point of the previous month, because this is perfect. If this happens like this, then we could expect September month to be bullish, and that's what we saw right here. So we had several points around here. We had like an possible inverted head and shoulders pattern, which is probably developing, but we cannot guarantee that until it has started moving towards the half of this previous move. But that's a possibility. And other thing is that we had this huge trend line which was available here to us, this monthly trend line, and then we had the previous support around here, and also we had Fibonacci ratios are available to us. There is another one which is available to us around this is 9140. So if the market reverses and if it starts to fall down, which I'm not expecting now, but if it does, then it is expected to come down to 9140. But after that, it should almost immediately start to go back up sharply. So that's what I'm expecting here on DXY on monthly perspective. Now, if we bring in our original analysis and go to the weekly time frame, actually go to the daily time frame, what we can see that we found these zones in the last week's analysis. We looked at this particular yellow zone because of Fibonacci confluences in there and because of the market structure. And it came right into there and started to move up. And if I go to the 4-hour time frame, this is how it looked. So the market came into that zone and started to move up. It's because of various M patterns which were developing here. So there was one here. If I could show something like this, there was one M pattern which was a little bit overextended here. This went right into that. And other one was here. And that completed right in that yellow zone. So when we have M patterns completing, right, we know that market is supposed to go up. So that's what has happened. So let's see what is expected now, what DXY could be doing right now. So for that, what we should do is we should go back to the higher time frames. We should always be looking at higher time frames. Minor movements on daily, 4 hourly or 1 hourly, time frames, they matter, right? Because all the moves actually start from there. But if you want to get the good perspective, then you must go to the higher time frame. So if I go to the weekly time frame, what we can see is that market is creating this candle. Now this candle is kind of like piercing pattern, which is basically it has started like a little bit lower than the previous one, and it has closed above the 50% of the previous one. So that means the market is supposed to be bullish next week. Having said that, there has been a lot of bearish momentum in DXY. So it is possible that initially we can see like a downward move in DXY and then start to go back up. But just by looking at this candlestick structure, I can expect market to be bullish next week. I mean, it is supposed to create a bull candle next week. It may or may not be a huge one, but ultimately when the market actually picks up like the momentum, then it is expected to come upwards around 94.21, somewhere around here, or even like the previous structure around here. And that should confluence nicely with a Fibonacci level. So this is the zone that we are looking at. This is the level that we are looking at in terms of DXY ultimately. But if I draw Fibonacci from here, that's 38.2. That will also confluence nicely with 200 moving average, the previous structure here, and that should complete a huge M pattern, which is right there. So that M pattern is available to us like this. So pattern is complete, but the profit target will be around this level. So that's what I'm expecting on DXY. Let's see, like what is expected right now on lower time frames. On lower time frames, I posted this idea that we had the short-term trend line and market could react to that. On Friday, it tried to turn into a complete bearish candle, but then again it picked up some strength, and now it is struggling with that. So this is the only thing which is remaining right now. Other thing is that even on lower time frames we can see few WNM patterns forming, right? So we have a pattern which is right there available to us, and if I draw fib on it, I see that it has come to let me quickly correct that. Okay, it has nearly come to 78.6, which can take it all the way to let's see, it can take all the way to this one, 94.44. So what I mean by that is this: if this trend line breaks, right, if it starts to move upwards, if this trend line breaks, then next level that we are looking at is around 93.90, because that's a round number and we had previous structure around here. There has been a lot of movement around that area, so that's one. Other thing is that if that is broken, then we are looking at this sort of level. And if that is broken, then we are obviously looking for even further move into this area or even higher than that. So that is kind of like a zone that we have for DXY. Okay, that's the bull side of it. And on the bear side, because it has created this double divergence space, double bottom kind of thing, I'm expecting market to move higher, and that is also being supported by the candle on the weekly time frame. However, if we see that market moving down, then what can happen? What we should do is just close this and look at, like just eyeball it, like what the market is trying to tell us. What we can see that market is creating a channel kind of thing as well. So if I draw something like this, what we can expect market to come down back to this channel somewhere around here, or even lower than that into this zone. So the first level will be back into this zone, the first one, which is around 92 level or so. And if that is broken, then we are looking at 91.17. So these both of these zones are still bullish opportunity for DXY. If the market comes here, then we can expect market to go back up. But the chances of DXY going higher are actually getting the chances are getting bigger and bigger now. So that's DXY. Now, if DXY is supposed to move higher, that means most of the other currency pairs, EURUSD, GBP, AUD, NZD, they are supposed to go down. But as I mentioned, we have to be careful here because we have a case for bearish side as well. So we should be covering those pairs on both sides. So let's look at Euro USD to start with. Okay, so let's look at Euro USD. Now, on Euro USD, in the previous week, I posted this idea that the market was supposed to come into this zone and start to fall. That's exactly how it has happened. Previously, I mentioned that market was supposed to go to 1.19661, which it reached. Then I said it would probably come to 1.2 level, and if it does reach there, then we will expect market to go down. Now, as we can see, we also have a kind of W pattern appearing on Euro USD, which basically means that if this level of 1.8690 is broken, then we'll look for something like this. Like so, this will be something like a W pattern, but this is not one of those best W patterns that we can have. But if this level is broken, then we can expect market to go to 1.9215. So these levels, what I'm trying to say, these levels are still valid and they can still work out. Usually market performs a double top kind of or double bottom kind of test around round numbers. Because this was an initial reactions to 1.12, 1.2, we can expect market to go back up once again and create a double top right there. So that is a possibility on Euro USD. However, if the DXY starts to move down, then what will happen? Let me clean this chart up first, and then we'll go to the higher time frame to see what is going on. Okay, let's go to the monthly time frame of Euro USD. What's happening right there is that market has come to 61.8 Fibonacci level of this leg, of this particular leg. And that is why the market is showing this reaction. We also had a moving average right there, and that is why in the previous analysis I mentioned that market could be going a little bit upwards just to touch that 1.2, and then it could be actually coming down. So that's what's happening right now. Now I'm expecting this month to be bearish on Euro USD because of the previous structure that we had. But there can be a little bit of upward movement in this month before it becomes again a bearish candle. So watch out for that thing. Watch out for retest of 1.2 area. If I go to the weekly time frame, this candle is showing very good rejection from the top. There have been several rejections from here, from the similar kind of region 1, 2, 3, and 4. There have been several rejections like this, and this has closed beyond 50% of the previous one. This is not exactly dark cloud cover kind of pattern, but it is very close, and it is mimicking the behavior of DXY as well. So ideally, the Euro USD is expected to go down because of this candlestick behavior. So let's look at the daily time frame, what has been happening there. On daily time frame, we have a lot of consolidation happening, and if you know how to trade WNM patterns, then there are so many opportunities right in there. I can just point out so many opportunities, and were able to take few of them ourselves. So we can see that there is a W pattern here, and when the W pattern completes, the market is expected to go down. Then we had another W pattern here, which completed on this, and we could have taken that. Then there is an M pattern which completed here. That's why the market started to move higher. Then we had complex W pattern here, which completed around here, and then second completed around here. So there are so many opportunities right there if you are trading for in a lower time frame or for day trading. But from from future point of view, the one thing that I can tell right now is that this level of 200 moving average needs to be broken for it to actually go down. So far what we can see, this entire area has been acting as support here. There has been a lot of movement, upward rejection from this region recently. So this needs to be broken before it can actually fall further down into a level of something like this. So these are the levels that we are looking for. Watch out for a retest of 1.2. I'm not expecting that to happen, but if it happens, then we should be careful. If you are going for a short position, then you should be managing your position based on that possibility. Other thing that we can obviously note in this structure is that there have been several double tops or divergence based double tops. One is around here, second one is around here, third one is around here. So the market is obviously wants to go down, but it is consolidating right now. And by the looks of the past past day's candle, Friday's candle, it is expected market to actually fill this gap, fill this complete wick. So we'll be waiting for the market to actually show us next move, and based on that we'll start to look for a trade. So if it breaks through this, then this sort of move is expected. If it breaks through this, then we are looking at this level around 1.7316, right? And in that process we'll have an M pattern completion as well. So after that, it is possible that we can see another move upwards from here to retest that zone. So that's what we have on Euro USD. Let's move on to AUD USD. Okay, on AUD USD, in the previous analysis, I mentioned that market was expected to come to 0.73912 right here, and then it was expected to fall, which exactly it did, and now it has come to 61.8 Fibonacci level, which was our second profit target. The first one was around 73066, so it has reached its profit target, and from this moving average, it started to go back upwards. So pretty much Euro USD, this is still looking like it may want to go back up once more, but it may never reach the previous highs of 73912. It may go a little bit back up, and then it can start to fall. So what is the level that we should be watching? So if I draw Fibonacci on this leg, we can see that it has come to 38.2. So that level where it is right now, that is important. And if that level is broken, and if we get a good opportunity, then we should be looking for 61.8 around that level, somewhere like this. So these are the levels that I'm looking for. If the market breaks through this zone, then we'll be looking for 71788 level. And if we switch it off and go to the monthly time frame, see what we have right there. Okay, AUD USD has been bullish for quite a while, and it has actually completed a pattern on monthly time frame. Now what we have here is that we have a level present right there. So if I go back to the daily time frame, if the market actually turns into very bullish mode, if it actually crosses all of these levels, then we are looking at 74359 as the highest point that it can reach to, and that can happen this month itself. But for that to happen, DXY will have to turn into into extreme bearish mode. For now, the DXY is looking a little bullish. We still need to see whether what happens around this level, if if it reaches 93, 91, or if it starts to fall down any further. Depending on that, other currency pairs will start to behave. So we'll see how it actually goes. And these are the levels that I'm looking at on AUD USD. Okay, so next one is going to be GBP USD. Okay. On GBP USD, we identified this particular zone, and so our analysis was that market would come here and start to show some reaction here, which it did, but we also had this higher point. This is what I was just talking about. If the market becomes extremely bullish, then AUD USD can go to that high point, and that's the case with GBP USD. When it broke through that zone, it reached that high point of 1.34364. In fact, it actually went through that, and then it started to fall. So we were able to take a little short position from here because the market actually showed a lot of bullish momentum here. We didn't want to continue with that with our short positions for a longer period of time, so we were able to take little short position from here, but we closed it very early because of the previous momentum here. So what do we have on GBP USD? What we should do is we should just clean this up because the market has created a new structure and start afresh. So if I go to the monthly time frame, what we can see that the market has created this W pattern here. That means I should be drawing Fibonacci on it, and what we can see that it has come to 61.8. Okay, and if I go to the weekly time frame, I can see that it has come there. Okay, and if I draw Fibonacci on it from here to here, I see that it has, okay, perfect. Right, so what I'm looking for is actually this particular zone right here, and that's where the market is. So because this is weekly time frame, so this may actually take a while for it to reach its profit target. But what I'm expecting market to do is that if it starts to fall down from that zone, it is expected to go down into these moving averages somewhere around here. But remember, we also have this 1.30 round number, sorry, 1.31 round number. So if I just change that to like this. So first stop is not going to be there. It is going to be around here. That's first target. And then the market may stop after that around here. So I'll be watching these two levels on weekly time frame. On daily time frame, this is what we're looking at. So on daily time frame, it touched the mid of the Bollinger Band, it started to move high, and that means that it may actually start to go a little bit higher before coming down. But if you look at the last candle, this entire bullish move that we had still did not manage to actually create a bull candle. That basically tells me that the next day is probably going to be again a wick filling kind of day. So I'm expecting market to start going down once again. Let's look at the 4-hour time frame to see what do we have there. On 4-hour time frame, we have this previous move and then market fell down. So if I draw Fibonacci on the previous move, you can see that it has come to 61.8, and that is why it is rising up. And it's very much like what we saw on AUDUSD. So this is what we have. Okay, if I draw Fibonacci on it, okay, so that means the maximum it can come up to is this, right? Okay, so this is what we are looking at. If I go back to the daily time frame, if the market starts to move, I'm expecting it to actually fall down. But if the market starts to move, then it can go into this level and then it can start to fall from there. Otherwise, it will just start to fall from where it is right now. And the maximum that we'll be looking for is 1.31 round number. And if that is broken, then we'll be looking for 1.293003. So that's what we have on GBP USD. And let's move on to USD Cad. Okay, on USD Cad, we have been watching this particular zone for a long period of time. I think we have been watching this level or around this level for months now. And this has been a very important level because there are so many confluences around this particular zone. So if I go back to the daily time frame, what has been happening? Market picked up a lot of momentum here because a huge WM pattern which was finished, and I mentioned that in my previous analysis, and market started to move higher, and now this zone is acting as a resistance. This used to be support here, and we were expecting market to move higher from this, but it did not. It actually fell down from that zone to create an extended M pattern, and that is why now it is acting as resistance. So this is what is actually causing the problem in DXY. If USD CAD starts to pick up, then we can expect it to move into this level, right? We can see that if the market breaks through this, then this is the level that we are going to look at. But the condition is that it needs to pick up that kind of bullish momentum. So if I go to the 4-hour time frame, what we see that we have this W pattern forming right here, and that can actually lead us into somewhere around here. So let's draw Fibonacci on it. Yeah. So that can actually take us just above this zone. So if the market actually becomes bullish, right, then it will probably come just above the zone, perform a retest, and that's where we can find our opportunity to move into this 200 moving average that we have. And if that is broken, then we're looking at the next level right here. So this is what we can expect. On the bear side, we also have an M pattern forming, so which can actually lead the price back down to near about this level that we have. So this is possible for USDCAD. It can fall to this level of near about 1.30286. And if it starts to pick up bullish momentum, enough momentum to break through this zone, then we can expect market to go down and deeply retest this zone before start to move higher. So USD CAD at the moment is not looking very good. If you're doing if you're doing day trading or short term trading, then probably you have better opportunities. But from long term swing trading, it is not looking very good. Here we have an M pattern. Let's say on 1 hour time frame, we have this M pattern right there, and that can actually push the price back upwards. This is what we have available to us. Let me change the color of it so that we can see. Let's change it to something else. And that can actually push the price up if you are trading on lower time frame. So you'll have to be careful with that. And that can also create an extended M pattern to bring it down into 1.30286. So if USD CAD starts to fall down, then that can have an impact on DXY as well. Okay. Let's move on to let's look at indices. Okay. So first of all, S&P 500, and we are going to look at the monthly time frame. Now, S&P 500 followed our exact plan. We were actually waiting for market to come to this level of 3556.9, and we identified this level near about 3 or 4 weeks ago in our analysis. One of the reasons was that we were expecting market to actually fall down from there, and it did. It created this spindle, or spindle kind of candle there. So during this month, market actually fell down and then recovered in the same month. So it completed that pattern right there. And once that happens, when this sort of pattern forms, then we expect market to come to this sort of Fibonacci level of 1.13, and that is why we were expecting it to go there. So what's happening right now is that this month is expected to remain as a bearish candle because of that. However, what kind of profit targets that we are looking at? So first level that we had on our chart was this 3400. That's where the market has come, and the next level that we have is approximately this level of 3339. So if I go to the daily time frame, we can expect market to move upwards because now it is testing mid of the Bollinger Band, and it has actually shown quite a bit of reaction upwards. So we can expect market to move upwards, and then it is expected to form kind of like an M pattern. So that's what we are looking for. If, however, in a case it breaks through that 3556, then we are looking for 3738 level. But we'll have to wait and watch what kind of structure it actually develops. If I go to the 4-hour time frame, we see that it has actually tested the 200 moving average. And if I draw Fibonacci extension on this, You see that it has come to 1414. Okay, that means that this could actually be potentially coming back into this 35569. If the market starts to find enough strength, then it can come all the way back into 3556.9, and after that we can actually look for like double top kind of scenario where the market can start to fall back down. So if I go back to the daily, this is the scenario that we're looking at. Okay, that's S&P 500. Let's look at US30. US30 also came into our zone and started to fall down. Now US30 has started to look um, very much like our S&P 500, and this has been actually following our plan very nicely. We have been tracking it from here. We expected market to move to 27161, and then we were expecting it to go to 27636, and then from there we were expecting it to come into the zone, and that's exactly how it has actually worked out. Now what we can also see is that market is creating a stepper kind of pattern here, which is right here, and that means if it starts to fall down, then it could be reaching back into this level of 26494. But even before that, what we should do is you should go to the monthly time frame and see what has been happening. So the market has created this W pattern here. This is a complex W pattern, and that's why it is falling. It is trying to mimic now the behavior of S&P 500. You see that this is looking extended one, but you see they are looking very much similar now. So if S&P 500 is going to go down, I'm expecting US30 to go down as well, and this has come into the previous structure of 27645 already. So if I go to the daily time frame, it can fall all the way down to 27183. So that level is expected for market to go down. But you see, it came down into that level that we had already drawn on our chart, and it started to move up. So if I go to the daily time frame, I'm expecting pretty much like S&P 500. I'm expecting it to move back into this zone, and somewhere around there, we should get a very good opportunity to go short. And if you're looking for a long position, I'll be little careful because of this candle that actually formed. Because if the market actually starts lower, then we can expect a good bullish move. Otherwise, I'll be like I'll wait for the next day candle to show its its behavior before I start to look for a long position. But there is an opportunity for us to go long here as well. Let's look at the 4 hour time frame. On 4 hour time frame, yeah, it's looking pretty much like S&P 500. So if I draw Fibonacci on it, yeah, it's very much like that. So this is the level that we can expect market to come to if it starts to move higher. So if the market picks up bullish momentum, then it is expected to go back into that zone, and that's what we can look for from trading point of view. Okay, so we have covered S&P 500, US30. Let's look at FTSE 100. Okay, on FTSE 100, we did not cover it in last week's analysis, but week before, we were able to take 3 good positions on FTSE 100. So what's happening on this index? FTSE 100 is taking a divergence from S&P 500, but because S&P 500 has started to fall a little bit, FTSE 100 is going to fall a little bit more, because it has already been showing negative momentum, downward momentum to it. So if it starts to fall down, it can go all the way down to this level, which we have. But look at just the candle, right? The kiss candle is engulfing bearish candle. Before that, we had this inverted hammer as well. So right now it is kind of like consolidation, but this candle is telling us that more bearish momentum can be expected on it. Apart from that, we can also see that a possible M pattern could be forming in here. So if I go to the weekly time frame, what we can see that possibly there is an M pattern forming, especially when this candle actually has closed below the previous level here. Okay, if that is the case, then we can draw Fibonacci on it to see where the market has come to. So this came to 38.2. That means it is expected to come down to somewhere around here. But before that, we also have the 61.8, which we found out from higher time frame. So if it starts to fall down, then this sort of move is expected. And if that is broken, then we can expect market to go to that level. Okay, another thing is that we can draw something like this as well. So we have another level to watch out for around here. So that's what we are looking at. And in terms of bullish opportunity, I can expect next day, Monday probably is going to be bullish on FTSE 100, just to retest the previous structure or even go a little bit higher as well. The reason behind that is that we have another M pattern here. If I go to so we have this M pattern, which actually forced the price to go up, and that may have another impact. I mean, it can start to move higher again to this level because of this. And if we draw Fibonacci on it, so this is the level that we are expecting. These are two levels, so it's going to be it's going to be kind of like in a zone around here. So that's what we can expect. If the market starts to move upwards, then this is the zone that we are looking at. Okay. What else? Okay, next one is going to be commodities. So let's look at gold. Okay, right. On gold, we had several opportunities and we were able to take a few positions on gold. But before we jump in there, let's see what has been happening. We spotted this on lower time frame as a day trade, and we were able to take along from here all the way to this target, and then we were able to take a little short position going back into this zone. Then I mentioned that if this zone becomes like a resistance, then I will look for a short opportunity, and I was expecting it to turn into resistance, but it did not. On Friday, during the last few hours, it started to move back up. That means this zone is still valid. That area of 1928 to 1930 is still acting as a very good support for gold. Now, looking back on higher time frame, why we have been looking at this region is because of this. Let me just give you a quick reminder of this. Gold has created this W pattern here. It's an extended W pattern. That means it was expected to go down, and that is why when we looked at this particular zone, we were able to take short position. This is the W pattern which actually completed there. So since then, we have been looking at various opportunities around that zone. So what we are going to do is we are going to clean this up and look at that level once again. So give me just 1 second before we go and start to look for further opportunities. I'm just going to quickly clean this up. Okay. Now, because we have this W pattern, right? And that means the market is expected to go down on higher time frame. That's why we were actually taking a short from here, and that's why the market is expected to go down furthermore. But you see that that analysis on monthly time frame, so it may take time to actually reach all those profit targets. Before that, we can have several opportunities on the long side and the short side, and the market may actually go back up to give us better opportunities. So we should be trading, we can have our biases, but we should be trading only what we see, and that's how we can maximize our opportunities. The bias for me is like short side, at least to this level again, or like furthermore into this level. But if I get a good long opportunity, I'll go for that and I'll go for short positions. But I'll be favoring my short positions more because higher time frame is in my favor. So if I go to the weekly time frame, what I see that the market is struggling with that particular zone of 1927 and 1930 level. But look at this candle. This candle is actually an engulfing candle, engulfing bearish candle, and that basically shows that the market is expected to go down furthermore. But having said that, this is again looking at weekly. So if you're day trading or if you had like positions for on daily time frame, then you may still have a chance to go long on gold. Again, this is one of those levels where the market can come to, because this is a moving average. So market may actually start to fall down to this level where we had like the previous touch as well, this one here as well. So this 1900 around that area, that's a good round number as well. So that's a good area where we can look for a long position, or if you're looking for short, then this can act as like your profit target region. So if I go to the daily time frame, what I see that there are a few things happening. As I mentioned before in my analysis, that we can spot that we have this W pattern here, which has turned into a complex W pattern. What I mean by that is we have something like this right now. Oops. We have something like this right now, or this can be also taken like this. So these levels which we found out in previous analysis, they are still valid. 1988 level is valid, 2014 level is valid, 2022 level is still valid, because we have this opportunity of having a W pattern. So if the market starts to move higher from here, it needs to go first challenge this 1988, and then if it breaks through that, then the next level is 2014, and the next one is going to be 2028, something like that. Now let me just quickly draw Fibonacci on it just to confirm something. Yep. And little bit extended case can be like it may touch that zone once again before it start to fall down again. Now that is the bullish scenario that we have. On the bearish scenario, what we have here is that we also have this M pattern forming. So that is going to look like this. And that will complete somewhere around here. So let me just quickly draw Fibonacci to find that level. Okay. So this is where the market may come to. One level is right there, 1891. So this is why that area is very, very important. Around like 1900 level is very important. We have seen that the market rejected that. It went through it but immediately recovered again. But this time, if it starts to fall down, if this 1920 1930 zone is broken, then we are looking for something like this. So this is going to be my area of interest. And once the market has reached there, then we can expect it to move even further up. And it may come back again to retest that structure here, which is acting as support right now. So let's see like what happens on gold. At the moment, it is not exactly very clear what's happening. There was a head and shoulders pattern which we identified, and that worked out fine. It may on 4-hour time frame, I can see another level which is around like this 200 moving average. Market may actually start to move upwards. There is a double bottom which has actually formed here, and now we have a W pattern forming on 4-hour as well. So let's see if we can find an opportunity there. If I draw Fibonacci on it, okay, that's one. Another one is around here. Yep. So this is looking like a good level here as well. And if I draw Fibonacci on this, okay, yeah, that's looking very good. Okay, so now remember this move that we just discussed. Now this can also be broken into sub moves. So let's look at these. Okay, if the market starts to move higher, then the first level is this. If that gets broken, then the next level is this, and then the third level is going to be around here. So these are the levels that I'll be looking for. If it actually breaks through this, then I'll be looking for 1908 because that's near about round number, but I'll be looking for 1891. These are from lower time frames. On higher time frame, I have another level present here on 1861, and then we have 1840. Those levels are still valid on from higher time frame. So that's what we have on gold. Let's look at silver. Right, on silver, we mentioned we were looking for this level of 2691 as a level, or no, not 2621, 2624 as the level of decision making. Why? Because it was kind of like, consolidating. It was expected to come down here, and then we were expecting it to make a decision whether it wanted to go up or not. Now silver has a better bullish case than gold at the moment. Even though if we look at the previous week's candle, this is still looking like a bearish candle, which can indicate another move down. But you see that the 30 level was never reached. When the market comes very close to these levels, like these round number levels, especially like which are multiple of tens, it usually like creates an initial reaction. It generates an initial reaction, but then it usually goes back into that level or even higher than that to create a double top kind of thing. So that is why silver may have a better opportunity for bullish case. But at the moment, it is still struggling with that level that we identified on 20 few weeks ago on 26 to 241, and that is still acting as a decision level. If it actually breaks through that, then the next one is 22.91. However, if it starts to move higher from this level, then we know where it is going to go to. That's approximately around here. If we go to the daily time frame, it is again consolidating, so there is no clear indication right now on daily time frame, but on 4-hour time frame we have a good indication. We have an engulfing candle here, and market has been like taking this area as a support. There has been a lot of rejections around here, but you see the 200 moving average is right below it. So I'll still be very careful taking a long trade here. I need to see whether it is actually moving upwards. If I miss an opportunity to go long, I'll just miss it. That's fine. But if it actually comes down into this zone and around 200 moving average, if I see that the market is giving me a good opportunity to go long, then I will take it. Otherwise, I won't. I'll be very careful around this zone, especially when all these moving averages are coming closer and they are about to cross. These crossovers are very important. They can give us very good opportunities, but you have to be on the right side of the crossover. And we can see that these two moving averages are coming very close to each other, and they are probably going to cross as well. So I'll be very careful on silver. I have a simple rule: if in doubt, get out. So basically, simple as that. I'm not going to trade silver if I do not see a clear picture around here. Let's look at US oil. On US oil, we have not been actually covering US oil for quite some time because there has been a lot of consolidation. The market has been moving upwards, but upwards like in this kind of channel. But when we last saw, we were expecting this structure to be broken to have a bearish move, and that's what the market has done. And if we want to see where it is probably going to go to, what we can do is we can draw Fibonacci on here, and we can see that it has gone through 38.2, and that means it is expected somewhere around here. Give me just 1 second. I think it is going to do even better, right? So yes, so if the bearish momentum continues like this, then this is a very good area that we identified a few weeks ago that is still valid. But for that to happen, it needs to break through this level of 37.92. At the moment, again, there's pretty much like silver, as I said, all of these moving averages are coming together. This can be an area of confusion. So if you do not have a clear picture, ideally you should not be trading. Just by looking at this candle that we have, it can actually create another bullish candle in the market next day or so. If I go back to the weekly time frame, yeah, on weekly time frame, this is a very good engulfing candle which has engulfed so much of previous price action. That means it is expected to go down even further down. But as I said, like there is an opportunity for one day to turn into a bullish candle. So that's what we have. So personally, I'm not going to trade US oil because this is not looking clear enough for me. I will be out of this market. So what we have covered so far is DXY, and then we have covered um, Euro USD, AUD USD, GBP USD, USD Cad, and on gold, on commodities, we have covered gold and silver. Okay, so that's about it. Okay, somebody is actually requesting me to look at Nasdaq 100 as well, so let's include that in this. I missed that. So let's look at Nasdaq 100. Okay. These are not valid anymore. Although, like we were saying that the market may come back into this zone and start to move higher, and we were expecting market to come to this level of 11751, and that has happened. In fact, it has actually gone further up. So what we should be doing, we should be just removing this and look at from higher time frame point of view. Okay, so this has actually completed another extended pattern here. If I draw Fibonacci on this, and if I draw Fibonacci on here, it should be 1.618. Yeah, exactly right. It came into 1.618 and then started to fall down. And if I'm not wrong, then this should be near about equal move as well. Okay, no, it's not. Okay, it's fine. Right, so 1.618, so that means we have this extended pattern, and that also means that the market was expected to show some reaction from that level, because 1.618 is a major Fibonacci extension level that we have, and that means if I draw Fib on it like this, it is expected to go down to 23.6 first, which is around here. It came very close to it, but it did not reach there, and then if that breaks, then we are looking at 38.2. Because there is no previous history around here, so we cannot actually make use of that. But what we have is just the current price action. So if we go to the weekly time frame, on weekly time frame, this is looking like a spindle candle, which is on the top, is actually a sign of trend reversal. So I'm expecting market to go down, and this 23.6 Fibonacci level around 11,098, that is also going to confluence nicely with this moving average. So this is still a possibility, right? Market may actually come down to test that level. Let's look at the daily time frame. On daily time frame, okay, this came very close to that level, but it hasn't actually went in there. It hasn't actually gone in there. So what we can expect market to do is actually on daily time frame, it can create a bullish candle maybe for a day or so, until it reaches this. And if I draw Fibonacci on this move, yeah, that's exactly 61.8 right there. So it is possible that market may start to go back up and then fall back down into this zone before it start to move again, go back high. But we'll see what happens around here. And in that process, we will also have this M pattern forming. So we'll see how it actually forms, like what kind of price action happens around here. But there is a possibility of bullish momentum here. Let's look at 4-hour time frame. on 4-hour time frame, pretty much like S&P 500 or US30, we can also see that the market is creating a stepper pattern. So this is a little bit extended. Okay, once more. Right. So the next level is going to be somewhere around here. Right. Okay. So in terms of bullish momentum, if the bullish opportunity, if the market starts to move higher, then this is the first level. Second level is possibly around here, but I'll still be looking for short positions because of the higher time frame candlestick that has been forming. Even in this month, it is forming into a spindle, and here on weekly time frame, similar kind of thing. So up or down, on higher time frame, it is like indicating more towards the downside. Um, but we cannot deny that there can be an opportunity for long here, pretty much like S&P 500 or US30. So this is what we have on Nasdaq. Okay. Somebody is also requesting me to cover NatGas, which I usually do not. I rarely look into natural gas. I don't even remember the code for it. Um, let's see if I can find one. Natural gas. Okay, this is the one. Let's look at the monthly time frame. Okay, I think we analyzed it a few months ago. So let me just remove this and see what's happening. Okay, this is looking like a very good W pattern here, and that basically means that when a W pattern completes, the market is expected to go down, and it may come here to this high, which we can already spot just by looking at it, and then we have this level which has already been broken, and this was an important level for the market because when we have something like this sharp move, the market is expected to show a reaction. So I just by looking at this, I'm expecting NatGas to be bearish, but let's look at from weekly point of view. Yes, so we have this very good pattern. Actually, in fact, it's a very good opportunity right now. If we look at this, we have, oops, sorry, we have this W pattern completing somewhere around there. So let's look at this. We have 50%. Okay, right. Okay, this is looking very good. So this is the zone that we are looking for. But the condition is that it needs to survive this level. So if 2.783 is broken and market starts to move higher, then it is going to go into that level of 2.942. And even in that zone, it can go deeper into that top high of that zone. That is what we can see from this pattern that we have. Okay, but it needs to survive that level. Why I'm saying that is because of we had this gap which is probably going to get filled up very soon. So this is the gap that we have right there, and then we also have this 200 moving average which is right there, and then we have one version of the pattern completing in that gap. So ideally market should be falling because we have more factors around here, and if the market starts to fall, then we will be looking for something like this first, this level first, followed by again that previous point somewhere around here, this zone. So that's what we are looking at in terms of NatGas. Now this zone is very important. If this is broken, then we can expect higher. If it is not, if you get a good opportunity to go short, then we can go short up to 2.5. And if that is broken as well, then we are looking at somewhere around here for the market to be reached. But let's look at from daily point of view. Okay, on daily time frame, we can see that there was a very good bullish move here, and I can already see that it is showing us a sign that it is not going to hold that zone. So we'll have to see for another day or so. It is possible that market may come here, perform a retest of this zone and then start to go higher. So if you're looking for a long opportunity, that can be a good opportunity right there. But this can push the price down because there are several factors aligned in that zone. So that's what we have on natural gas, and yeah, that's about it. Right. Okay. Thanks for joining me in this analysis. Hopefully you enjoyed this. Hope you found this useful. If you did, share with other traders, other trading communities, and hit the like button. This is the first stream that we have done here. So if you like this and you think like, this is the best way going forward for weekly analysis or midweek analysis, then we can continue doing this. So I'll be waiting for your feedback. Put your comments in the comment section and let me know, and we'll see how it goes. Right. And have a good week next week, and stay safe and do well in the trading. I'll see you the next week. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to Vikinsa.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students and also look at the brochure. The brochure has a lot more information, including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to Vikinsa.com, and under training section you'll be able to see and submit this form. Thank you for watching. Find and follow us on these social media channels.